Welcome to Stock Talk. We're jumping right in today.
Absolutely. We've got the latest SEC filing from Bill Ackman's Perishing Square Capital Management.
That's right, the Q1 2025 portfolio. And it's a hefty one over, what, $11.9 billion?
Yep, spread across 11 different securities, so plenty to dig into.
And our mission here is really to understand the key moves, the big strategic shifts Ackman's making.
Exactly. We'll try to be, precise and get straight to the point on what these changes might signal.
And hey, if you're listening to Stock Talk and you like this kind of deep dive,
Yeah, definitely subscribe, maybe give us a like or share it.
and leave a comment. We actually do read those.
We do. Okay, so
Yeah.
where do we start? Big picture first, or the biggest change?
Let's hit the headline. The new #1 holding
Right. Uber Technologies.
popped right up to the top spot. What's the story there?
Well, it's not just at the top, it's a brand new position. That's the key thing.
Okay, so not just adding to an existing stake.
Nope. Straight in at #1, it's about 18.5% of the whole portfolio. Over 30 million shares, worth just over $2.2 billion.
So going from zero to the biggest holding, that's a statement.
It really is. It suggests, huge confidence in where Uber's heading, profitability, market share.
Especially in rideshare and delivery, I assume.
Exactly those two. It seems like a major bet on their dominance and, frankly, their ability to keep making money.
And it fits that whole mobility theme we hear about, right? It's not just cars anymore.
Precisely. It's how people move, how goods move. Uber's right in the middle of that shift. A very forward-looking play, potentially.
Okay. Interesting start. Now, who's #2? Because I heard there was movement there, too.
There was. It's Brookfield Corp, and they actually increased their stake here
Increased. By how much?
by about 17.5%. So Brookfield is now the second largest holding, pretty much neck and neck with Uber, actually.
Really? So close percentages.
Yeah, Brookfield is just over 18% of the portfolio. Value-wise, that's around $2.15 billion.
And Brookfield is, remind me, they're quite diversified, aren't they?
Extremely. You're looking at real estate, major infrastructure projects, renewable energy, even private equity.
So a completely different kind of bet compared to Uber.
Totally different. This feels more like a play on long-term, stable growth across essential assets, maybe a bit of an inflation hedge in there, too, with all the real assets.
Diversification, stability,
Hmm.
makes sense in the current climate.
Yeah, I think that's likely the appeal for Ackman. Foundational, maybe?
Okay, foundational assets with Brookfield, big growth bet with Uber. What about tech, specifically Alphabet or Google?
Yes, Google. There's some interesting shuffling going on there. Not just buying or selling, but shifting between share classes.
Gifting, how so?
Okay, so they cut back on the Alphabet Class C shares. That's the GOG ticker by about 16%.
16% reduction in GOG.
Right. But at the same time, they increased the Class A shares GOGL by over 11%.
Huh. So selling one type of Google, buying another. Why do that?
Well, the main difference is voting rights. Class A have them, Class C doesn't.
So maybe wanting a bit more say.
Or it could just be a valuation thing. Sometimes those share classes trade at slightly different prices, and maybe they saw an opportunity to, optimize the holding.
But the bottom line is, still a massive believer in Google overall.
Oh, absolutely. The total investment is still huge. It clearly shows they still believe in Google's dominance in ads, cloud, AI, all of it. It's just fine-tuning the position.
Got it. Strategic rebalancing, not losing faith. Now let's talk about a sector where faith might have decreased a bit. Hilton?
Yeah, Hilton Worldwide Holdings, that's a pretty dramatic cut.
How dramatic are we
A
talking?
reduction of nearly 45%. Almost half the position.
Wow, 45%. Okay, that's significant. What's the likely reason there?
I think the simplest explanation is probably the right one. Profit-taking.
Makes sense. Hospitality had a huge bounce back after the downturn.
Exactly. Hilton stock did very well. So Ackman likely locked in those gains, took some money off the table.
And maybe redeployed it into something like Uber.
Quite possibly. Selling a winner in a recovered sector to fund a bigger bet on a potential future winner. Classic portfolio management.
Okay, so big new bet on Uber, more confidence in Brookfield, tweaking Google, taking profits in Hilton. What about the rest? Any notable stability or smaller moves?
Yeah, a few things stayed the same.
Right.
Restaurant Brands International QSR.
Right, the Tim Hortons and Burger King parent.
Yep, that position was unchanged. Same for Howard Hughes Holdings, the real estate company.
So continued conviction there.
Seems like it. Then there were some minor adjustments. A slight trim in Canadian Pacific Kansas City, the Whale Road.
Still a big transportation holding, though.
Oh yeah, still significant, just a small reduction. And Chipotle, CMG, also saw a reduction.
Profit taking there too, maybe. It's had a great run.
Very likely.
Yeah.
Still a core holding, it seems, but taking some profits makes sense.
Anything else stand out?
Seaport Entertainment Group was unchanged, still a smaller position. And interestingly, a slight increase in Hertz Global Holdings.
Hertz, the car rental company. That feels slightly counterintuitive next to the big Uber bet.
It does, doesn't it? But maybe it's part of that broader mobility view.
How so?
Well, maybe the thinking is that ride-sharing and traditional rentals can coexist. Or maybe Hertz plays a role in supplying vehicles for ride-sharing. It broadens the exposure to how people get around, even if it's a small position relative to Uber.
Okay. A more nuanced take on the whole transportation space, then.
Potentially, yeah. It adds another layer to that mobility theme.
So let's try and wrap this all up. If you had to summarize the overall strategy revealed in this Q1 filing, what would you say?
I'd say it looks like a strategy focused on the future, but with a grounding in stable assets, too.
Okay. Break that down a bit.
Well, you've got the big, bold move into mobility with Uber that's clearly looking at growth and disruption.
Right.
Then you balance that with the increased Brookfield stake. That's your diversified real assets, play for maybe more stable long-term returns.
Got it. Growth and stability.
Then there's the smart rebalancing in tech with Alphabet, showing they're still committed but always looking to optimize. And finally, the willingness to take profits, like with Hilton, and move that capital elsewhere.
So it's a mix. Betting on new trends, sticking with solid foundations, and
Yeah.
actively managing the positions.
Exactly. It feels very intentional, combining growth opportunities with established brands and assets.
Fascinating stuff. This deep dive definitely paints a clear picture of Ackman's thinking right now.
It really does. It gives you a real snapshot into Q1 2025.
And it leaves us with something to think about, doesn't it?
Like what?
Well, thinking about that big Uber investment, it makes you wonder what other traditional industries might be next in line for major disruption.
That's a great question. And how could investors, position themselves for those kinds of shifts?
Yeah. And it also brings up that point about balance in your own portfolio, right?
Mhm.
How much do you allocate to those potentially high-growth, disruptive areas versus the more stable, established investments?
Absolutely. Finding that right balance is key for any investor. A really good takeaway.
Definitely something for everyone listening to consider. Well, thanks for breaking all that down.
My pleasure. Always interesting to see what the big players are doing.